Our own managing director of Network 18, Raghav Bahl, joins in to talk about various issues. The group is in the news on many counts. One, the promoter pumping in 200 crores at a premium into Network 18, and this morning we hear Colors, which is the general entertainment channel, the GEC belonging to the group, has overtaken Star Plus as the #1 GEC in the country. Raghav, good morning. Congratulations on Colors. Sustainable, you think, this #1 position? And by when do you think revenues of Colors will start moving towards Star Plus? Do you see that happening anytime soon?
Thanks, Udayan. Congratulations to you as well. Well, yeah, I mean, Colors is clearly sustainable because what's happened this week is really one number going up. So that's like the index going up 10% and everyone suddenly noticing it. But what is more important is that if you look at it over the last 6 to 8 weeks, so that's sustained. Over the last 6 to 8 weeks, Colors has been ahead of Star Plus by almost 3 percentage points in terms of reach. And that's really the first parameter to look at, like volumes in the stock market. You know, you look at volumes, not just the index level. So last 6-8 weeks, we've been ahead of Star Plus consistently every week. Number 2, weekday prime time, which is really, let's say, the F&O action. We've been ahead of Star Plus consistently the last 3 or 4 weeks. So what we've hit just a couple of days ago is the big talking point. But in terms of the robustness of this increase, the evidence is aplenty. Having said that, there'll be ups, there'll be downs, but clearly Colors is very much on the horizon as a #1 player. Revenues, will always follow performance. The fact is, Star Plus has been a leader for the last 10 years, and that's a very, very strong legacy, and we have great respect for that legacy. They do 800-900 crores of revenues. Colors will probably hit 400-500 very soon. And then it's a question of closing that 300 crore gap with Star Plus. It'll happen. It'll happen. As long as we deliver these numbers, it'll happen. The fact is that Colors is well ahead of the business plan that we'd drawn up for it, because the numbers it's delivered are well ahead of what we thought we would be at. So there's really no reason for revenues to follow.
If indeed Colors breaks even fairly soon or sooner than you expect, Raghav, what would be the large cash requirements for the group? Because you've just infused 200 crores into the group and you've created headroom to infuse more capital. Would that suffice, or would any of your properties in the intermediate foreseeable future require any significant cash infusion? Because Colors was the one which required some capital investment, but it appears that it may not need too much capital going forward.
Well, Colors, our best case estimate now is that Colors needs no more than 150 crores from us. Remember, that will be matched by 150 crores from Viacom. So we don't believe we need more than 300 crores at that property. So 150 crores max is what we need to put in. All our other properties are at cash break-even or cash surplus, including properties which needed severe restructuring like Infomedia. So really, as far as operations are concerned, pure operations are concerned, we need money only for Viacom and some small amount of investment for the launch of Forbes India magazine, which is now days away. But what we need capital for, and that's not something that's hidden, is we need to deleverage the TV18 balance sheet, because that's the only balance sheet within the group which is over-leveraged. Every other balance sheet within the group is very nicely leveraged. So we need cash to deleverage TV18, because we believe that will release enormous value for the TV18 shareholder, who unfortunately has seen value erosion over the last few months. So we need cash for that. We've put in 250 crores actually, Udayan, because 200 crores came in through this preferential allotment, and another 50 crores came in by warrants conversion at Network 18 level. So in the last 1 month, 250 crores of equity or near equity has flown into the Network 18 balance sheet. We're out in the market to place 2.5 crore shares, either to a strategic partner or to a foreign investor, a large PE fund, or indeed to a combination of the two. Because remember, we have enough headroom now at Network 18 to go out and place this entire lot to a foreign investor. We are quite confident we'll pick that up fairly shortly. Once we've done that, our ability to recapitalize the TV18 balance sheet and deleverage it is pretty much a given. So as we stand today, that's what we need money for: 150 crores into Viacom, another 20-50 crores into Forbes and Web and small little investments, frankly, and the major dollop of this capital going towards deleveraging the TV18 balance sheet.
Raghav, morning. That's actually a concern raised by a couple of brokerages. The fact that group debt stands at 1,700 crores while EBITDA stands at about 150 crores. That operations are strong, but the balance sheet is stretched. In terms of a timeline, Raghav, how long do you think the process of deleveraging or making the balance sheet leaner might take?
Well, 1,700 crores is gross debt, Mithali. We also hold nearly 900 crores of cash. So the net debt of the group is 800 crores. So I think you have to look at the 800 crore number and not the 1,700 crore number. The 1,700 crore number makes for alarming headlines, but that's not the reality. What we believe even 800 crores is something we should deleverage for the strength on the balance sheet. So I don't believe it's going to take, from the indications that we have and the conversations we have going on with potential investors, I don't believe it's going to take anything outside of 6 months. So within 6 months, we hope to have TV18 considerably deleveraged. Remember again, as I repeat, the net debt is only 850 crores. It's not 1,700 crores. We are holding 850 crores of cash. And this, I might tell you, is cash. It's in AAA rated bonds and bank deposits. It's not anywhere else.
Okay, glad to hear that. Just on the subject of colours, what's your outlook for the GEC space generally, Raghav? Because the opinion seems to be it's going to remain quite fragmented. There won't be a clear market leader. And how is the advertising environment specific to general entertainment right now?
Well, in such a large space as general entertainment, it's quite a miracle, and hats off to Star Plus for having been a leader for 9 years. Clearly, this is such a large space that 2 or 3 players will dominate it. And as we've seen all over the world, American media is dominated by 3 large networks. So 3 large networks will dominate the Indian entertainment market. That's a given. Because the cost of one person dominating is just too high. So we believe that Star Plus is strong, we believe that Colors is very strong, and we believe Zee is very strong. We look upon them as a very worthy competitor. So we believe that these 3 players will sort of have the battle ahead of them, and it's going to be a nice, competitive, grueling battle. The best person will always be ahead. As far as revenues go, I think you'll be glad to know that general entertainment channels, at least in our stable, are posting record revenues. I mean, not just Colors, which people may say is a 9-month wonder. Let's look at MTV, which is a 14-year wonder. And that posted its single highest growth rate in revenues this year. It's up 28 to 29% year on year. Why even that? I mean, look at IBN 7, which was one of our smallest news properties, posted its highest revenue in March, 6 crores. First time it crossed 6 crores. So, I mean, I'm not saying that the world has turned rosy all of a sudden. All I'm saying is that the properties which are gaining strength are doing well on the revenue front.
Good luck, Raghav. Thanks very much for stopping by with all of that. That's with the standard caveat that Raghav is the promoter of all the stocks that you're seeing on the screen, and we all, of course, are employees of this group, so you must take that caveat on board.